Good morning, everybody. It's Friday, November 15th. Did I get the date right today?
You did. Good job.
It's the 15th. All right. Matt Bennett is here. Grain markets are a little bit higher. Before we start today, Matthew, your group, Ag Market, is having a meeting in Nashville in February. Why don't you tell us about it?
Yeah, I mean, we got a pretty good group of speakers. It'll be our third straight year, there in Nashville. Of course, you're going to be there. Kenzie will be there, do a show. Hopefully, I know we've talked about that, but we've got Dan Bozzi, Eric Norland from CME. He's pretty dynamic speaker, actually. One of the better ones I've heard out there, and Snodgrass. But we're trying to come at him with a little different approach, and so we're doing of course markets. But we're going to have a guy there from Brazil who's pretty heavily vested in agriculture down there. Family farms a ton of ground, and just try to give people a view of kind of maybe what's going on ahead. What a global trade look like? What do exports look like? What's the U.S.'s role? And so, just trying to give everyone a chance to think about things just a little bit differently. So you can go to the Ag Market page, and the landing page there, you can sign up. So pretty easy.
It's a good meeting. I was there last year. I would encourage you guys to check it out. At risk of doing too many advertisements, Matt, we did a mailbag video yesterday, which I thought was a ton of fun. The best questions come in from our premium crowd. Like, they're the most topical, relevant questions when it comes to grain markets and grain marketing. We talked about everything from capture and carry to basis to unsold bushels to 2025 marketing. It's pretty good stuff.
Yeah, absolutely. Right. Well, it was a good time yesterday.
Yeah, I think we ran for 40. I tried to do like one question per minute, but we ran 40 minutes. So
I got long-winded.
It happens. That's how it goes, Okay, first story.
Alrighty, so soybean and wheat futures continue to drift toward their respective August lows. The January 24 soybean contract lost 20 cents per bushel on Thursday and trades about 20 cents from the lows that were posted this past August. A number of factors, including prospects of a huge Brazilian crop, a pending U.S.-China trade dispute, and burdensome global supplies, continue to weigh on prices. The December 24 HRW wheat contract lost 8 cents on Thursday and trades within 9 cents of its August low early this morning. U.S. winter wheat conditions are likely to see additional improvement given recent rainfall.
All right, Matthew, let's start with soybeans. I don't know that there was one singular headline responsible for yesterday's sell-off. What do you make of it?
Yeah, I mean, the thing is, you start drawing some. I mean, you got lines there drawn as far as overhead, but if you look underneath the market, you've gone down several times and try to bust through pretty strong support, I would say. But I don't know, Joe. I mean, fundamentally, this bean market has got issues. We know that. We've all talked about it. Are you going to take this thing and just break the dam, so to speak, and move on lower? I think it's possible. Fundamentally, there are issues, but obviously the funds wanted to get a little bit long corn. They really didn't want to do that on soybeans, and that's a little bit problematic. But if Brazil doesn't have weather issues, you're looking at a global glut of beans. That's all there is to it. So here in the U.S., in my opinion, we've overstated exports. There's reasons to think that this stocks number that got dropped to 470 could go right back to 500 plus pretty easily if they would be clear on exports. I don't want to say honest, but just get back to more of a realistic number. And I'm afraid that's what you're going to see. It's going to be a major headwind for beans.
There are a lot of people and smart people who believe that a trade down to the low nines, even into the upper eights, is possible, if not probable. Does that happen in the next 2 months if Brazilian weather is good?
I think there's a pretty good chance that happens if Brazilian weather's good. And Argentina. I mean, to me, Argentina being a little bit dry right now with forecast looking a little dry is probably keeping the bean market from falling even more. I mean, if you fix Argentina, I think that you would do what you said, low nines, maybe even high eights.
Okay, so wheat, I think, was dragged lower by row crops to some extent, but also we've seen an improvement, and I think we'll see an additional improvement in winter wheat conditions in the U.S.
Yeah, I mean, it no doubt about it. I mean, you've seen pretty decent weather over the last 10 days, and where the weather was. I mean, we certainly, conditions have to get better, in my opinion. How much
they're going to improve again next week?
Yeah, I mean, there's no doubt about it. So, I mean, I don't know. I mean, to me, you're struggling right now to find reasons to rally the wheat market.
Okay, I've got another couple charts before our next story. Here's wheat, corn, and wheat has fallen like a rock versus corn, which has acted much better. Does this mean that we feed more wheat, or is that not, we're not there quite yet?
I mean, we talked about this a little bit yesterday.
Mhm.
I do think there's some wheat. I know there's some wheat getting fed out west, but on a grand scale, corn's pretty cheap right now as well.
Right.
But people out in that part of the world are having to pay overs for it. So
Mhm.
it makes it a little bit different. I do think that wheat works its way into the rations if we continue to see this, though.
This daily chart looks really bad. When you look at the historical of wheat corn, we're not at extreme levels by any means. So I don't know that it has to mean anything. Last chart before we do our next story is a corn chart, and corn is a different animal. It's acted much better. I mean, it was down yesterday, but it's acted much better relative to soybeans and relative to wheat. What are we supposed to make of the relative strength in the corn market?
Yeah, I think the corn's got a little more of a story. I mean, you've got a demand story there that has
Mhm.
unfolded. We know that exports look fantastic. You know, it's not just Mexico being front loaded. I mean, we know they've been front loaded to an extent, but there have been some countries step in and buy corn that we don't typically see. It looks like some are looking at this, originators in the world, as corn is a bit of a value. And so I don't know. I mean, U.S. exports are probably understated. Corn grind for ethanol has been awfully good as well. So I don't know. I think that corn's got a demand story, which is what you would typically want to see if you want to see a little more longer lasting type rally. But I think the funds have gone long. And so what, you know, when you see the funds go long, I mean, here's the thing though, Joe. The funds have bought a ton of contracts in the last few
Mhm.
weeks. And corn's rallied what, 30 cents, 40
Yeah.
cents. So I don't know. I don't want to get too super bowled up, but definitely corn's got a better story than the other two. And that's why this chart looks better. It's not that it looks fantastic, but certainly you've got these two channels and you should have support in the market if the market would dip down again.
I'd probably argue right now that the 2025 U.S. acreage outlook could be a drag on corn. No one's going to want to plant soybeans. They don't pencil. Corn doesn't pencil either, but it pencils less bad. And if
Yeah.
beans continue at their current trajectory, we're going to plant too many corn acres, and that's a problem. All
Yeah, I
right.
couldn't agree more.
Next story.
Donald Trump will nominate RFK Jr. to lead the Department of Health and Human Services. The nomination will require Senate confirmation, which may prove difficult. Kennedy has advocated for an overhaul of food safety and environmental guidelines. He has also supported holistic medicines and expressed opposition to vaccines. In recent weeks, Kennedy stated that he has no plans to take vaccines away from anyone. Kennedy launched his own presidential bid last year as a Democrat, later switching to run as an independent before eventually conceding to support Trump.
I think the headline, as far as we're concerned, Matt, is that RFK Jr. will not head up the USDA and that he's going to head up HHS. Is this good or bad, or are you indifferent?
I think it's good on a couple different fronts. I think some of his ideas, as far as the health of our country, whether people want to admit it or not, are probably true. And
Yep.
so I think that we have to get healthier. We have to eat healthier. Our standards have to get better. As far as not being the Secretary of Ag, I think it's a really good thing.
Yeah.
If you were looking at some of the wholesale changes he was trying to promote. Now, I think he's going to want to have a say-so, on some of that stuff, as extreme as what he's felt. But at the same time, depending on who the Secretary of Ag is, they might not play well there, And so I do think some of the picks we could potentially see there excite me. That would be really farmer friendly, and so hopefully we'll pick one of those.
Yeah, so farmer friendly would be good. He hasn't announced anything yet. I would have imagined that it's coming sometime soon. We'll see. We got some tariff talk.
We sure do. The CEO of JP Morgan and Chase believes that Trump's tariffs proposals will encourage negotiations. Jamie Dimon said that the tariffs need to be implemented wisely, but they're necessary for unfair trade deals. Dimon declined to endorse either presidential candidate, but did congratulate Trump on his win. Trump announced on Thursday that the CEO will not have a place in his administration. Over the last year, Dimon has warned that geopolitical instability poses the greatest threat to the global economy.
They asked Jamie Dimon about not getting any sort of spot, and he said, "I haven't had a boss in 25 years. I don't want one now." He's pretty influential, though, and what he thinks, the gist of this, and this is kind of what we discussed a little bit yesterday, is that what if China and Mexico and other countries come to the negotiating table before a trade war starts? That would be very positive for our markets, I think.
No, absolutely. And I know a lot of people think, well, I mean, Trump's gotten a lot of a lot of shade thrown at him over tariffs. But Joe, you and I both know those tariffs remained in place over the last 4 years.
Yeah.
So if someone comes to the table and they say, "Hey, you know what? That's an admission that these things might hurt us just a little bit more than what we're willing to do," and so if we need to make an adjustment, hey, let's sit down and do it right now. I believe it when I see it. If they do that, but if they do, that's a great sign. Great sign.
You'd love to see China come to the table and say we're ready to talk before they decide to reinstitute their soybean tariffs. The way China still has soybean tariffs in place on U.S. beans, they just waive them in like all situations. So it'd be really easy for them to just say, "Oh yeah, tariffs back in place." But hopefully they talk before that happens.
Absolutely.
All right, what's up next?
U.S. ethanol production was record high last week. Weekly output of 1.11 million barrels per day was the best for any week on record, exceeding the previous peak from this past July. Ethanol stocks were pegged at 22.04 million barrels. The print was up marginally compared to the previous week and up 5% compared to the same week last year. Implied gasoline demand was up 6.3% compared to the previous week, but down 1.1% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 1% compared to the same period last year.
Marketing year to date, Matthew, ethanol production is up like 3 or 4% versus last year. And USDA is actually projecting that corn demand via ethanol will decline year over year. Now, I don't know that this pace is sustainable, but something, say, maybe 2% above last year might be sustainable. And that would mean additional demand on the balance sheet.
Yeah. I mean, that's something that we thought I guess that they had the fodder to do, in this last report. But November, a lot of times you don't see demand changes. But bottom line is you're definitely running strong. The only thing that I'm a little cautious on, some of the plants we talked to are running awful tight right now, if not some negative margins in some cases, depending on what their hedges look like. It'll be interesting to see moving forward. I do think, though, that this ethanol grind is going to have to be adjusted lower eventually. These guys will run on tight margins or even negative margins for a small amount of time if they feel like better times are ahead. And by all means, I think most of these guys know there's going to be a plentiful supply of corn. Yes, bases have been hot for some of those folks here over the last 3 weeks, but I think they understand that corn's going to be moving pretty heavily here in the next month. So I don't know. I would think these numbers get adjusted in January to an extent. How much, I don't know, but at least 25.
You've really got friendly demand news across the board in corn. I mean, feed demand's kind of static, but ethanol's good. Exports are good. I don't have anything bad to say about it.
CONAB made slight adjustments to its estimates for this season's Brazilian corn and soybean crops. The agency is estimating total corn production at 119.8 million metric tons, a slight increase from its previous estimate of 119.7 million metric tons. Corn exports were unchanged at 34 million metric tons. Soybean production is projected to reach 166.1 million metric tons, a marginal increase from the previous estimate of 166 million metric tons. And soybean exports are estimated at 105.47 million metric tons, up from 105.54 million metric tons.
CONAB continues to project a monster crop. Of course, there's a little bit of difference between them and USDA, as there always is. But if this is the case, then that means that this chart and this projection from USDA world soybean ending stocks to use ratio close to 33%, which is almost record high. This idea remains intact, and I don't have any reason to doubt that this is reality as of right now.
No, I don't either. I mean, you're going to need a pretty significant weather event for this not to happen, in my opinion. I mean, right now they're getting a really good start, and just because you get a good start doesn't mean you're going to have a huge crop. But we all know that it certainly is a good start. It's a good start. So I don't know. Here's the thing on Brazil: they're going to continue to plant more and more beans. We know that. It's pretty tough to see them in a drought that is going to impact them north to south. I mean, you're talking a monster country here that's planting soybeans, and so. I don't know. My thought, Joe, is that you're going to need that's your prayer. If you're sitting here trying to think that you're going to get really bullish, you've got to have a weather issue down there. That's all there is to it.
Think about the U.S. growing season in June and July when there's a crop scare event, meaning that the markets rally because it gets dry for a couple of weeks. 9 out of 10 times, that's a really good marketing opportunity if you're a farmer. The same can probably be said for a Brazilian crop scare event during the next 3 months. It's probably 9 out of 10 times going to be a pretty good marketing opportunity if you're a farmer. That's one thing that's changed over the last even 5 years. I think that's changed.
Yeah, for sure.
What's up next?
Farmers are turning to generic crop chemicals to cut costs. A decline in farm income is forcing some farmers to shift to generic pesticides and fungicides as they plan for next year's crops. The change is expected to financially impact chemical companies like Bayer, Syngenta, and Corteva. Notably, Bayer's stock declined to a 20-year low on Tuesday. The number of generic chemicals on the market continues to grow as active ingredient patents expire. Farmers are also trying to limit their chemical use by investing in equipment that targets weeds and other pests.
Farmers are going to switch from Dr. Pepper to Mr. Pibb, the way that it sounds, Matt. Does this mean anything for, are there any production implications here?
I mean, I don't know how these products perform. You've got to assume that they're going to perform similarly, but it's tough to know. I mean, I know talk about investment in equipment, to target weeds. The only problem with that is that that's a big time investment. I mean, those machines are not cheap, and I don't know anybody that's sitting on a ton of cash right now. So, maybe some of your co-ops are going to buy into those, but whether the savings get passed on to the farmer to the degree that they should, I don't know. But as far as the quality of the chemicals, I really don't know much about these generics. But by all means, we've used, for instance, you go to Rural King, you pick something up. As far as Roundup, I don't know what they call it, Glyphomax or whatever, but works just fine from what we've seen. But we haven't used it on a broad-based scale on fields either. So I don't have a whole lot of doubt that they work, though.
Drought monitor update.
So a large portion of the Corn Belt received rainfall last week. Drought conditions improved across Ohio, Kentucky, Indiana, Illinois, and Missouri. Cooler temperatures kept dry conditions from worsening in areas that did not receive precipitation. However, conditions still deteriorated in a small area in northeast Nebraska and southeast Wisconsin. Substantial rainfall across the southern plains caused conditions to improve in Kansas and Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country 64%, soybeans 57%, winter wheat 43%, spring wheat 42%, and cattle country 49%.
We've seen some decent rainfall over the last week. It's been scattered. The rains in HRW wheat country in the southern plains are absolutely noteworthy, and I think that's part of the reason the wheat market's been under pressure. Got some more rain in the forecast, the way that it looks. Matt, in our premium video yesterday, you expressed some concern about the drought and next year, some of the long-term forecast stuff.
Yeah. I mean, talked to Eric Snodgrass about this. He was on our webinar on Monday, and he basically said that when you're this dry in September and October, there are some implications. Of course, you've got La Nina's influence as well. And I think the last thing he was kind of looking for, hoping that it didn't occur, was the PDO, to change, which is your cool water mass out just south of Alaska. But the thing is that he said in his career, he hasn't really had this kind of, fear, if you will, about a drought that he has this year. So we asked him, just put a number on it, and he said 6 out of 10. He thought that there'd be a statistically significant drought this next year based on what he's seeing and how dry we have gotten, how dry we've been, drought monitor. So I don't know. It's probably something to keep in the back of your head. I mean, I know that a lot of folks, when you're in this situation and prices are at multi-year lows, when you start rallying back to areas that you've had, you haven't seen for a little while, sometimes people go hog wild and sell too much. 2012, that didn't work out so well. So I just want to keep it in the back of our heads.
I am the number one hater of long-term weather forecasts. I don't look at them, but Eric's smarter than I am. So that's interesting. What's next?
We had a flash sale of soybeans yesterday. U.S. exporters sold 6 million bushels of beans to unknown destinations for delivery during the current marketing year. Accumulated soybean export sales are up 17% compared to the same period last year.
Unknown's been a bigger deal with regard to corn. We've got all these corn sales to unknown, and we continue to be told. I mean, I get text every time we talk about it, Joe. It's not China. It's not China. My commercial desk says it's not China. Could they be wrong? I don't think they're wrong.
Yeah, I mean, I don't think they're wrong either. That's the same thing that we've heard. So I don't know. Regardless, I mean, if China would step in, it would certainly make things a heck of a lot better. But at the same time, I mean, you're looking at a pretty sized Chinese crop as well. So at least that's what they're saying. I guess we got to take them for their word.
No, I don't think it's going to happen. What did Cal do yesterday?
Cattle futures were lower. Live cattle were 75 cents to $1.20 lower, with the exception of the November contract, which saw a gain of 115. Feeders saw losses ranging from 45 cents to 85 cents. Box beef was lower yesterday. Choice ended the day at 303.80. That was down 314. And Select ended the day at 276.66. That was down $2.
What do you think about cattle going into the last 6 weeks of the calendar year, Matt?
Depends on who you talk to, but some of the folks that we're talking to, said they feel like they've got some coverage, and so I just don't know that you're going to see a whole lot of upside here right now. I'm still concerned, that you could see the funds decide to pull their money out for the time being. I mean, they've been long forever. I just feel like they've gotten tired of it, and right now, even though fundamentally you don't want to get too hard on the cattle market, sometimes even when the fundamentals look good, prices can move lower. So I would stay protected.
I feel like over the years, the last month or two of the calendar year in livestock can be really funny because of position squaring, and it's such a thinly traded market. I don't know. I wouldn't rule out anything. Outside markets here on Friday, guys. U.S. dollars off just a little bit. The stocks are down. S&P's down 33. The Dow's down 180. Bonds are off a little bit. Gold's up $3. Crude oil's down 29 cents, and the December WTI at 68.41. Matt, thanks for joining us, guys. Have a great weekend. We'll be back on Monday.